Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 22nd of March. The standoff continues in the markets. It's been a fairly volatile week. On the one hand, we of course have optimism around growth and the injection of fiscal stimulus amounting to $1.9 trillion. On the other hand, that in turn has stoked inflation fears, which means that the US economy could overheat. And despite the Federal Reserve's insistence that inflation is currently transitory and that it is unlikely to raise rates anytime between 2023, rising bond yields have nonetheless said that investors are currently disagreeing. On top of that, we've got the rotation theme still carrying on, and that's largely out of growth stocks, most particularly big tech of course, into the more industrial stocks. In the UK, we've got a situation where those more industrial stocks could actually benefit. The UK FTSE 100 is actually holding up quite well. It's obviously largely consisting of mature, cyclical, global-facing businesses, and those businesses which are seen to be the recipients of good fortunes following an economic bounce have been holding up pretty well. Keep an eye out on the oil price as well. Some concerns that the anticipated demand later in the year might have been overdone, has seen a fairly sharp sell-off, although having said that, the oil price remains up by over 20% in the year to date. So as we say, the Dow Jones is the main beneficiary of this rotation trade. In the year to date, it's currently up 7.4%. S&P 500 up 4.2%. The Nasdaq is now up just 1.8%. And the FTSE 100 continues to hold its own, up about 4.3%. Turning to next week, not too much to report in terms of big companies, but a couple to keep an eye out for. Firstly, full year numbers from Kingfisher, the owner of course of B&Q and Screwfix. A couple of interesting things going on here. Number one, will the DIY boom seen during lockdowns continue post-pandemic? And another thing is that the likes of Kingfisher, who've really benefited from the lockdown, are now starting to come up against some pretty tough comparatives. Obviously, the likes of March, April, etc. last year were fairly strong. Shares, nonetheless, up 150% over the last year. And also look out for any updates on its digital strategy. Also, half-year numbers from house builder Bellway, a number of tailwinds and evidence, of course, in terms of low interest rates, stamp duty, holiday, mortgage availability and so on. Shares up around 70% over the last year. So those tailwinds very much in evidence. Keep an eye out also for the strength of its balance sheet. That's been one of the things that's seen it through. It's paying a dividend, although the yield is only 1.5% or so. And it's also spent around £450 million on a land buying spree. So any updates on its outlook for current trading conditions is something to keep an eye out for. Thank you for watching. Have a great week.